Hello, hello. Hey everyone, welcome to yet another episode of Ying's Squawk Box. Today we're going to be talking about Disney. So let's turn our attention to the chart. This is the chart for Disney. Okay, we've been talking about this chart since 2 years ago. And I think it's going to be one of those big names that's blue chip, that's large cap with hidden monopolies in this equity market. Lots of people use that. Okay, everybody watches Disney, everybody has Disney Plus. It's not necessarily a competitor with Netflix, which some of the articles are arguing. I don't really think that's the case, right? Why that's not the case? If I like drinking Coke, I'm gonna drink Coke. I'm also gonna drink Pepsi. They're not necessarily competitors, okay? They share the market share. And if a person likes soft drinks, then chances are the both companies are gonna boom together. So it's not necessarily an either or, right? A lot of people are saying, I want Netflix stock, I'm not gonna touch Disney at all. That's not necessarily true. Some people are going the other way around, right? I'm just buying Disney, I'm not looking at Netflix. Well, that's not true either. You can have both, okay? You just gotta put your money behind it, you just gotta put a brain behind it. So with that being said, let's look at the chart. I've been talking about this chart since 2018. We have lots of turmoils, right? Ups and downs until this day. We have a disclosure of Disney Plus coming out. So let's put across, boom. And that's really when the stock is starting to take off. And we have all these volatilities coming right here. I believe that's pandemic, unfortunately. Let's put across, boom. And we have this trend line. Supposedly the trend line is gonna hold here, right? Unfortunately, that did not happen. We actually broke. We broke this 127 and we're going all the way down to 80, okay? That's not cool, that's not fun, right? That's anti-fun. It's not something you want your child to know. So with that being said, let's put across. That's the bottom. That's the bottom along with the market, along with the S&P 500, and that's going to be the bottom. Then it bounce back up. Now, me personally, I didn't know that's the bottom, right? I don't have a crystal ball. So what I did was I actually waited for this area. I know I've been talking about buying S&P 500 earlier since this day. Let's put a horizontal line. That's going to be the price I'm looking at. So technically speaking, all the prices below $100, I'm happy with the name, right? I just gotta find the courage to push the button. And there we go. So I think I actually bought it around this area. And I didn't actually buy the bottom. I think I bought like a 96, 99. But it's so far so good, right? It bounced back up slightly here. Let's put across. That's gonna be the pivot high, okay? And that's gonna be the high. That's gonna be starting of a new uptrend, okay? So when I say uptrend, I'm talking about higher sides and higher lows. So let's put a trend line, boom. It goes something like that, right? Why is that important? This spot is important because this 27 resistance, it's the previous support that the stock broke. So chances are the trader is going to be looking at that as a reference point. And if they look at that as a reference point, that's going to be when the put options, the call options, the strike price are going to be set at. So that's going to be an important price level. And now today we have this jump of a good earnings. Let's put across. Now the stock is going to start to take off. It already breached 128. It's poking into this resistance area. And I think after that, it's just going to be a straightforward uptrend. I know that we have Mulan coming out in early September. So let's put a vertical line. And I think the area for Disney in the next month or two is going to be somewhere around $140. And potentially by the end of the year, along with Christmas, along with all holiday sales, we might be able to see all-time highs. So let's put a horizontal line, boom. That's the trade. That's how the stock works. And if all of this is confusing to you, let's zoom out a little bit, right? This is micro point of view. We're looking at daily chart. How about we look at weekly chart or monthly chart? This is weekly chart. Everything is dense together, right? We have this big level around 120. Let's put a horizontal line. This is just too difficult to see. So I'm going to clean the screen up a little bit. I'm going to put a horizontal line, boom. That's going to be a big level. Here, we breach, let's put across. And starting from April 1st, 2019, we have lots of ups and downs, right? And this area is difficult to see. It's difficult to interpret. Are we going up? Are we going down? If we're going up, then why does this happen, right? It's confusing. However, there is a trick. And I'll show you exactly what that means. So this is the cross that we've been talking about. Here we have lots of ups and downs, and then we have this drop down, break this level, and we form a support here. So I'm gonna call that a support, and here I'm gonna call that a pivot top, all right? What's happening in this area? a trick to overcome this kind of volatility, this kind of noise, is to zoom further out. And what I mean by that is you look at the beginning of this breakout, right? The price level is somewhere here. So that's going to be, say, your opening price, right? And you look at the close. The close is going to be somewhere here, right? We have this bottom, it's a V bottom. We come back up, and that's going to be where this is close in, say, a 2-month frame, okay? So I'm going to put a close here, right? And then what's the high? That's going to be the high, okay? So I'm going to put a high, all right? And that's going to be the low, okay? So I'm going to say low. After this, let's use the definition of candlestick, okay? When I say candlestick, I'm talking about 4 prices: open, close, high, low, okay? So let's draw it out. Let me use a different color, okay? So this is open. Presumably, we're gonna start from there. And this candlestick is gonna close here. So that's gonna be the bottom of this candlestick, okay? And what's the high? This is technically speaking the high. So the high is here, that's gonna be the tail. That's going to be the tail to the bottom. That's the low. So essentially, we're talking about a candlestick that really looks something like this. In other words, we are still respecting this level. In other words, we're still respecting all these levitating supports. We're just really trying to absorb all the volatility onto the chart on a larger time frame. And this is all due to the pandemic, the protests, that sort of thing. And we want to factor all that volatility into the price. And that's really how things go. So in terms of practice, I would say this tail, you can ignore that, all right? This tail, you can ignore that. So once you ignore that tail, you can pretty much see that this trend line is still intact, right? This trend line is still intact, and this trend line is still intact. When the trend line is still intact, then what do we have? We have a bigger time frame, and we have a bigger time frame of bull flag. So that's for the pole, that's the pole of the bull flag, and eventually this name is gonna go, okay? And that's really how the bigger time frame come into play. And that analysis starting to take over the micro point of view. So there you go. I hope you liked today's episode. If you want to support the channel, give a like and hit that subscribe button. And I'll see you in the next episode.